Can you go into some more detail on those two, few examples of some of the stocks that you own in those two camps that you've outlined there?
Obviously, with the Perpetual Investment Company, we can buy some offshore stocks. So we doubled down on our Flutter investment. It's been a good investment, but I remember in March it had fallen 40-odd%. Obviously, there was no live sport. Given it's an online sports betting company, 80% of it's effectively online sports betting. Obviously, there's going to be a revenue hit, but we know the quality of the business. We know that gambling returns pretty quickly when there's... you remember, this wasn't an income shock for the man on the street. Given the level of transfer payments from government directly to the man on the street, there wasn't really an income shock at this level. So we know that gambling will pick up pretty quickly, but you'll be able to buy Flutter at half of what we could do in February. So we went pretty hard and we doubled our exposure to that one. Crown, another, it's been a core holding for us for a while, but it had fallen to a level down to about $6, $6.50, where you're getting the assets for basically a big discount. And these are monopolistic, city-based assets, run for a long time, and you're not going to get another one typically built in the same city.
And there'd been takeover interest in the past 12 months?
Yeah, so there'd been a couple of interested parties, and obviously, again, we doubled down on Crown as well, and you had Blackstone show up and take over the Melco stake of 9.9%. And if you look at Blackstone's history, they've done some transactions in North America on casino properties where they lift the assets out, and the management of the existing entity manages the assets for them. So we always thought that there was value in the assets, and such a discount to value of those underlying assets, we thought there was a real opportunity for us there. But then you have a look at, on the cyclical side, you had industrial metals, Oz Minerals, those sort of businesses, Iluka, they fell to such levels that the replacement value of the assets, again, were not called into question, but the market was assuming pretty bad outcomes.
So on that cyclical bucket that you're able to buy at discounts, do they remain long-term positioning for the within the portfolios, or was that opportunistic style investing?
There is an element of opportunistic there, but some of like the Oz Minerals is a good business in general. It's hard to get copper exposure, particularly where they're growing their reserves, etc. And they've gone through Carrapateena. They've gone in the middle of the capex, nearly finished it, etc. Oil, especially, is another one where we put some money to work. Negative oil prices, I suspect, was quite stunning to most people. Whether it was real, I don't know. But it did provide, again, that noise provided an opportunity to buy some very cheap oil exposure. And energy's been on the nose for quite a while. So we still think there's some value to be had in a lot of those names.